The market doesn't know what keeps you up at night. It doesn't know when you want to retire, and it doesn't know how old you are. The simple truth is, the market doesn't care. But if you care, you've tuned into the right place. You're listening to Investor Resources, bringing clarity to the confusing world of finance. Here are your hosts of Investor Resources, Don Creech and Perry Sykes.
This is Don Creech.
And this is Perry Sykes, and welcome to the Investor Resources Podcast.
So in our current market environment, there are plenty of things to worry about, debate,
Not the truth, yes.
keep you awake at night. What on earth should we be paying attention to? Now, if you followed us on the radio, and we were on the radio for 14 years before we started these podcasts, you know that we believe the important thing is, what does the chart tell you what's going on? But it's impossible to avoid the headlines because they're on the news all the time, or they're showing up in your mailbox with a solicitation for the hot recommendation from the latest guru to have found your address. Either your inbox or your mailbox, one or the other, comes in with this great opportunity that you must do right now. So should you focus on it?
They're going to save your portfolio every time. They're going to save it. Sure. Okay.
We're faced with this incessant barrage of noise, and somehow we kind of have to figure out what we're going to pay attention to. That's kind of life, isn't it? It's not just investments, but everything has a priority from the time we get up until the time we go to bed. We're trying to figure out what should we be paying attention to. So the market drops 1.5% in a given day. That's a big drop. The Fed says higher rates for longer than we expected. Well, it changes your perception of how well they're going to battle inflation and how quickly they'll reach their target, if they will. Will they throw in the towel? All these things are thrown at us all the time. The question is, which one's important? How do we manage to get through the noise in the investment arena? Because we focus on the wrong things. One, it could be devastating financially, and two, it's going to be emotionally and psychologically exhausting. It actually encourages bad behavior, investment behavior.
Very bad behavior, and very, very constantly, because for every headline there is, then there's going to be 1,000 explanations for why that headline came out, why the market's doing what it's doing, and then 1,000 suggestions for what you should be doing about it now. And if you listen to those, you're going to change what you're doing every day because they never stop coming out. And that's their number one advertisement. That's the number one marketing ploy for Wall Street, is to make sure there's a never-ending list of new topics and things you need to do something about today. And they're always going to have a product in mind for you to buy to do that. So they have to have it. It's the lifeblood of Wall Street marketing, and it's not going to stop. So you really have to be careful what you let into your investment process.
What you just brought up reminds me of, well, we'll be another rabbit trail here.
What the heck?
For a good decade or more, I was involved in an investment advisor group, and a key member of our group happened to be an author of a major international financial newsletter. And in the board meetings, we were discussing, how do you make a newsletter work? And the answer was simple. It was too simple. He said, you write scary headlines, because when investors get scared, they will subscribe for 18 to 36 months, and then they quit, and you write another scary headline. So scary headlines are more common than a headline that says, this is working and you're going to be okay.
Everything's fine. Don't worry so much. You don't want to see that. You want to see the world's coming to an end, but I can tell you how to stop it. Subscribe now. And that's the way it goes over and over again.
If there's nothing to worry about, you won't read the material.
Yeah.
So there's two questions that you should always ask yourself about variables or information that is coming to you. One is, how influential is it to be in meeting my objective, and
Right.
how knowable or predictable is it?
Right.
If it's not knowable, you got to quit. You're wasting time on it. And if it's
Right.
not going to have a major influence on your outcome, again, get a life. That would be the
Right.
better option.
That's right. And right now, what's out there, right? It's the Fed, 24 hours a day right now. What is the Fed going to do? When are they going to change policy? What's happening? And everybody's going to tell us exactly what's going to happen. It's completely unknowable. No one knows, but they're going to spend a lot of time telling us exactly what's going to happen and when it's going to happen. And of course, they have no clue. And that's exactly how much weight you should give that. None. They don't know what's going on, but they love to talk about it.
Well, and if you assume that interest rates are going to have an impact on equity prices, then you
Right.
have to believe in your assumption. And that's fine if you're right. But if you're wrong and you haven't done anything to monitor where you stand along the pathway, you're going to probably have a big shock and a disappointment on
Yep.
the other end. So currently, after last week's Fed meeting, we're assuming interest rates will stay high for at least a couple of years. That's a reasonable assumption,
It
but it
is.
is
Yes.
not it is not absolute, and we have to keep that in mind.
And in our case, it's not a prediction and never will be. We don't ever make any portfolio decisions based on a belief that something is going to happen in the future. You just can't. You can't know that. We wait for the data. We follow a trend, and that's something you can see. That's you know what's happening. Then you're not making a bet on what you think is going to happen in the future. That's just a losing game long term.
I had an interesting phone conversation with an individual who attended our monthly stock market update webinars. After each of those, we offer a free portfolio review. And he sent me an email with a list of really intelligent questions. But as we got involved in the discussion, his comment was, "This looks to me like an opportunity to roll my portfolio into small cap stocks because they've been out of favor for so long that these should be bargain prices."
Right.
And I said, well, now that's a dangerous assumption
Yep.
because value stocks have been out of favor at times for as long as 20 years. Value policy mutual funds, so just go back and look at the track record, and they lag the major market for long periods of time. The technology stocks, after the 2000 tech bubble blew apart, they were in doldrums for a decade and a half. So making the assumption that I know now what the bargain is that's going to be my home run to take care of my retirement in 10 or 15 years or 20 is a wild, unfounded, and certainly unsafe assumption.
It is.
Maybe you'll get lucky, but lucky's not an investment policy.
And you're going to lose so much time with an investment wrapped up in something that's potentially losing money that entire time because you think at some point it's going to turn around. And that's the seductive part. At some point it will turn around, but there's no reason to lose money on it for a decade or 2 decades waiting for that to happen. Wait, watch it start, see a trend change, then follow the money into that trend instead of saying, I want to get in on the front end because you never know how low is. You don't know how far down things will go before that turnaround comes. And it can go down a lot longer than anyone believes is possible at the outset, anyway.
So the only caveat to that is if you are truly a long-term investor and you don't watch
Sure.
your account. So if
Yep.
you had let's define long-term as 20 or 30 years. That's longer than most people are, want to ignore their account. Just simply put money in and assume it's going to work out all right. But that's buy and hold. And it reminds me of the run up that happened in gold and emerging markets up into the summer of 2011. And
Correct.
we were on a radio station at the time and said, it's time to get out of these. These things are turning over. Not everybody believed it, particularly the people that believed that the US dollar was going to collapse and we were no longer going to be reserve currency. We're talking about a decade ago. That still hasn't happened. And gold and emerging markets collapsed for years. Now, gold has come back to just basically break even after 12 years. If you're a long-term investor,
Yep.
you don't care that 12 years have gone by and you've made no money on that part of your portfolio.
And 12 years later, you can still read the same story. The US dollar is about to collapse. The US dollar is no longer going to be the world reserve currency. You have to buy gold. We're in dire straits here. Well, it was wrong 12 years ago. It's still wrong today because there's nothing that says that can happen right now.
But like gold and emerging markets back in 2011 and the collapse of the dollar and the loss of reserve currency status in the United States,
Yeah.
that turned out to be false narratives. I mean, gold did not continue to go to new highs. Emerging markets were not the panacea for the future for investors, and the dollar remains king dollar. We have to be careful about false narratives and find documentation for them. What's really the substantial support for a position that we're taking, particularly when it comes to our portfolio? And again, if some of you have followed us for a long time on the radio, and that is look at the chart, find out what investors are actually doing. Pay attention to that
That's what
because
we
that
mean when we keep saying follow the data. That's what we're talking about. We're looking at a chart tracking the price of an asset and looking at it compared to the market and saying, hey, is this a good thing to own or a bad thing to own without regard for the story that goes along with it? Because the narrative so many times has nothing to do with the reality of what's going on with the prices. And it doesn't matter if the narrative is really negative or if the narrative is really positive. It doesn't matter. You've got to track the data. You've got to look at the price. You've got to look at the volume. You've got to follow the money, not the story. The narrative doesn't matter.
our lives are overflowing with vast emptiness, and we want to fill that up. We Most people have a hard time dealing with silence.
Hmm.
The void is uncomfortable, and the same thing comes to pass with our investments. There must be something to do, but maybe you've already done it.
Right.
Charts help you with that. The
But rarely will an investor say to themselves, you know what, right now I should just be hands off. This is probably going to be okay. I'm just going to let this run. I think I'm in a pretty good spot. You're always looking at it because the investment world is always telling you, no, 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 there's a way to optimize this. There's a better solution. There's something else you can add. There's something you should make sure and take away. Whatever it is, it's to get you to buy something new. And it usually has nothing to do with your investment success or reaching your goals. It's got more to do with someone making a commission somewhere, because so often the best thing is just to leave it alone. And it doesn't mean to ignore things that need attention, but if you're doing okay and everything's running the direction you think it should be, let it work. Let it work for you instead of stopping it before it's done.
we love to create stories of control because we feel good if
Yep.
we're in control, but these are just basically their fantasies to subdue our terror of not knowing what is going to happen.
There you go. That's it.
But anything can happen at any time. Where we are tomorrow at this time of day is unknown.
Yep.
That is not going to change.
That's been heavily reinforced in the investment world. No one saw the reaction to COVID coming. No one saw the lockdowns. No one saw the trillions of dollars of money dumped on world markets. No one saw any of that. Not to mention, if you thought we were going to be locked down for COVID, you would assume the market was going to have a significant crash. Nope. How about going up the entire time? Well, that just goes to tell you, like you said, Don, anything can happen on any given day, and you have to be ready to deal with what is going on instead of what you believe should be going on, because when you get right down to it, that doesn't matter.
Watch the charts.
Yep.
Charts tell you the consensus of buyers and sellers. Every transaction has two parties, a buyer and a seller. What they agree to shows up in price. That data is known. Everything else is an assumption.
Yep, and as far as consuming all of that, the media out there, you've got to keep in mind that it's way easier to be negative than positive. And when you are out there looking at the financial media, the amount of negativeness out there every single day, if you read the press every day, no one would ever invest. Every day would be too dangerous to expose your money to that risk. But just remember, there's many more bad things that can happen than will happen. All that stuff doesn't happen because someone can show you a prediction and say, hey, you know what? I think the US dollar could collapse. Hey, you know what? I think the euro is about to be destroyed. I think the market in Germany is about to collapse. I think. Yep, all that could happen. Is it all going to happen? Nope. Don't base your portfolio on that. Wait for things to occur, see what they actually affect, and then make a decision based on what the data says, not on what a storyline or a headline says. You have to try to get that out of your investment system, and it's hard because it's nonstop, and there's lots of it, and a lot of it makes a lot of sense. You read the rationale, you're like, that could happen. We could see that could occur. Doesn't mean it's gonna, and you have to wait to see what is going to happen, what actually does transpire, instead of what the headlines are trying to make you afraid for, because they're trying to sell something behind that fear almost every time, and most of the time you shouldn't be a buyer.
Thanks for listening. Share the podcast with your family and friends. Subscribe. We use the button down below. We'll be back with another issue in the coming days.